Now, according to a new report by the Capital Markets Authority in Kenya, the Nairobi Securities Exchange shed off 117 billion shillings in the first quarter of 2022 as investors sought safer investments on jitters of the upcoming general elections. We had a conversation with the CEO of the Nairobi Securities Exchange, Geoffrey Odundo, on the performance of the bulls.
In the first quarter of this year, what we've witnessed is that we're having sort of a fair start in our view, because this is an election year in Kenya, and we had anticipated that we'll see lower turnovers to the run to the election. And we're seeing this level of fair activity on our equity and bond markets. On the equity side, for instance, we are now at about 32 billion shillings in turnover, compared to 38 billion last year. So we're just about 6 billion short, while on the bond markets, we're actually at par with a total of 243 billion shillings compared to 243 billion last year. So that's just an attestament that the markets are performing fairly at equal level as last year, despite the initial challenges that we faced this year, for instance, the Ukraine-Russian war and the elections that we have in our country. So I think it's a fair start.
A report by CMA says that the NSE shed off about 117 billion in this first quarter. Does that worry you? And is this, on the account of the jitters of the elections?
So the level of activity has essentially been a lot of local participation. We've seen some relatively, we call it a common phenomena that we see every election year, where there's a bit of foreign exit, just to, a bit of out of caution. But the attractive part is that the locals have provided that counter position that has enabled us to see all the exits being sufficiently covered by the local volumes. What concerns us more is the level of turnover that we see as we head to these elections. We're seeing a relatively depressed level of turnover because for us, whether we've got a foreign trade or a local trade, as long as the volumes are sufficient, I think we are pretty comfortable. But I must say that this is very common. I don't think it's something that can concern us at this point. I think it's a lot of issue about a bit of a heightened global risk and just a bit of the political projections or the political concerns that might present themselves in the country. But all in all, I think it's a fair run for us for the time being.
Okay, so let's move to listings, IPOs. What is in the pipeline for the NSE? I know you've been looking at government entities coming on board. What's the progress on that front?
I'd like to put the listings into context. I think a lot of concern has been raised on the issue of IPOs, but I must say that the market continues to attract listings of different forms. We are seeing continuous issues of secondary offers. For instance, last year we had a company that raised about 781 million on the platform through a rights issue. We were able to list 3 bond issuances, corporate bond issuances that raised about 18 billion shillings. The government of Kenya raised about 834 billion through additional new listings of bonds. And so really, the only area that we haven't been very, very active at all is an IPO. And the plans we have around that is that we've been engaging with different issuers, both government and private. And at the moment, we have about a few clients who are keen on doing an initial public offer. And it's still a bit of early days. We cannot disclose that. But we do project that this year we could be seeing an IPO coming into the market.
Towards the end of last year, we saw day trading coming live. That was quite exciting for the market. In terms of uptake, how is the uptake, and what is the contribution to NSE's turnover?
So we launched day trading in November of last year, and so today the market can trade multiple sessions on the same position in a day, and that's been very, very exciting. To date, we've done about 3% in turnover, which has been very, very exciting. That's an equivalent of about 784 million shillings. And we've seen that coming from a lot of our both the retail and institutional clients, which is a very good proof that this is a product that they've been waiting for a long time. And so that's progressed well. As a supporting framework to that, our depository, the Central Depository and Settlement Corporation, has now received full approval and have launched the Securities Lending and Borrowing Framework. Now that is going to be able to support our day trading more actively, because you could actually trade a position that you don't have and then go and borrow the stock from the market. We've gone for a screen-based securities lending and borrowing model that will allow any lenders to put all their positions on the screens, and that should make it more efficient. So I must say we're happy with the start. Very good progress at the moment. We were able to incentivize investors by offering a discount on the trading levy, and we're also engaging our partners to see if further discounts can be offered to make it more attractive to improve the level of turnover in this particular product.
I'm glad you mentioned that discount there, because day trading is all about the pricing, and there was a bit of a cry, especially from the brokers. How is that being handled?
As the NSE, we've taken the lead. We were able to offer a 5% discount, which makes the trading levies not 114 from not 12. And what that has done is that we've tried to, at least that has enhanced the level of interest. However, we're having a conversation with our other partners, the CMA and the CDSC, to see how they can also offer further incentives to make this product very, very attractive. So we have started engagements. We've been able to show the level of turnover and why we can do more if we're able to offer some level of reduced pricing on the trading levies to enhance the level of interest.
And I know one of the targets of day trading was you wanted to tap into the youth demographic. Have you been able to do that?
So the youth demographic remains a very key focus area for us. As you know, East African market has a very youthful population. In Kenya, for instance, about 75% of our population is really within the youth category. And what we've done here is that we're doing a lot of financial education through our social media platforms. We have a digital academy that is offering a lot of learning on an online basis. We have been able to talk to our brokers to develop access points and front ends that are now providing ability for them to trade from the comfort of their phones, iPads, and other gadgets. We've also given an ability for them to open accounts real time, which was a big issue. And so a lot of campaign on platforms that they access, the social media platforms, a lot of partnerships with our brokers who are our distribution channels, and also a lot of engagement on a direct basis through our digital platforms, and that's coming on well. We're also running challenge programs in partnership with our brokers. We recently had a challenge with one of our brokers, and we're seeing a lot of interest coming in. So that remains a key target area for us. What attracts us about the youth is that they're very active. They like momentum investments. So day trading is going to be one of the areas. We're seeing a lot of youth participating in online forex trading. And that just demonstrates to us that we just need to give them a new asset class that matches the character of investments that they desire.
Let's move to the fixed income market. I know 2021 was quite a good year for the fixed income markets, two very successful issuances there. What do you see for 2022 as far as the fixed income market is concerned?
So we last year we recorded extremely good trading on our fixed income market. Our secondary market was able to trade the highest volumes in our history of 956 billion shillings. And that was just proof that the fixed income market is now really maturing to a level that is making a good case for us to attract more and more players and more issuers into this market. Now, our projections this year is that we'll see almost the equivalent level of trading, because the government domestic borrowing program is still on track and on target. As I said, we've done 243 billion shillings in turnover this quarter, which is equivalent to what we did last year. So we are taking a view of a very strong performance in our fixed income markets. And in addition to that, we are going to be seeing more and more companies coming to raise money through corporate bonds and green bonds. And this remains a key focal area for us. Last year, we did 18 billion. We've had some companies want to come and do a green bond of 100 billion, 50 billion. So those are the kind of conversations that we're currently having with issuers. We're also working with the central bank, who are improving their infrastructure. We have also upgraded ours so that it can communicate better. And so I think it's going to be a key area for us. So our focus for this year on fixed income is that it's going to remain strong. One, because the yields are good. There's a lot of interest from Kenyans, especially the retail, who are coming through collective investment schemes and also through wealth management funds. And we do project a very strong year and possibly exceed the 956 billion we did last year.
Allow me to touch on news that is making headlines in the business world in Kenya, and that is the EABX, the East Africa Bond Exchange. What will be the impact of this on NSE's business? It is coming, it's targeting the fixed income market. What will be the impact of this for you?
EABX has come on board. We've been aware of the plans by the banks to set up a parallel exchange, and I think the objectives then were that they think the level of liquidity, the level of the size of the market has still not yet gotten to where it should be, and there was a view that a hybrid market would then be helpful to help grow this area. Our view as the NSE is that we believe that the NSE is already there, a strong infrastructure, and provides a necessary platform for even the banks to trade through a license we call the authorized securities dealer. So we didn't necessarily see the urgency of having this market at the moment. However, the market is there, it's with us. I think it's about how the positioning they take. They're coming in as newcomers. We have been there in this market for a long time, fully automated, understand how the client needs, and really have addressed and ensure that the market has operated efficiently over these years. So we welcome competition. We know there'll definitely be a cutback on some of our turnover. However, we project that there's more we can do, especially the corporate side. I think the size is limitless, and we're going to be talking to a lot of corporates to raise money to blend their capital needs. The capital markets provides that great avenue for expansion capital, while the banks provide the working capital. And so, taking that positioning, we still think the market is big for us to continue maintaining our market share and just ensuring that we remain the most competitive platform in this asset class.
Now, I know there are plans to invest in the Uganda Securities Exchange. How far is that?
Well, I think the discussions around regional investments is something that we've had for many years, and we've already started that journey. We invested in the Dar es Salaam Stock Exchange, and our investment strategy is around just partnerships and just ensuring that we invest in related or similar businesses, and that's why we went for the DRC, the DSC when they listed. I think we're going to wait for Uganda to do a listing if they so do, and at that time we'll consider whether we can invest in the USC. Right now, nothing has happened. I think it's the intention is basically because I think they've demutualized, and hopefully they'll one day do call for shares. And when that day comes, I think it'll be good for us to be an investor in that market, just like we welcome them to invest in the Kenyan market because we are a listed company.